and Assalamualaikum. Welcome back. We're now continuing with our part 3 of the lecture on Mfrs 141. We are talking about measurement. Before this, I have already mentioned that the measurement is either for initial measurement or for subsequent measurement. It will be measured at fair value less cost to sell. And now we are looking at the measurement for agricultural produce, for the agricultural produce. So if you look at agricultural produce, there are two things that you need to understand. Number one is the agricultural produce that is still attached to the biological asset. Let's say you have a tree here, and let's say these are the fruits. Since it is still attached to the tree, it is actually part of the tree, right? So it will be measured and accounted for under Mfrs 141. That one is at the point of harvest. That was for the tree. If you talk about animal, that is the case. For example, you talk about a cow. We are talking about cow, and let's say about a dairy cow. If the milk at the point of harvest is still in the cow body, that is still at the point of harvest, right? So this is under Mfrs 141. So agricultural produce that are still attached to the biological asset, which is at the point of harvest, either for plant or animal, that is going to still use Mfrs 141. However, if you have agricultural produce which are harvested, let's say this is a durian tree, for example. So the durian tree was actually harvested, so being detached from the tree. So this durian will no longer be measured using Mfrs 141, but this durian that has been detached from the tree, and that is what you call harvested product or harvested from the entity's biological asset, fruits that you pluck, or maybe harvested milk from the dairy cow just now. So those are actually to be accounted for under Mfrs 102. And it is measured at fair value less cost to sell. And it is no longer using Mfrs 141 because that has been harvested. So the difference here is you need to see whether is it still being attached, harvested, or maybe has been harvested from, meaning that being detached from the biological asset. If it's still attached, meaning to say that at the point of harvest, it is still attached to the biological asset, that will be using Mfrs 141. Once you have harvested it, it is under Mfrs 102. Once you process, let's say, the milk to become cheese, or maybe you process the fruits to become strawberry jam, or durian to become maybe durian ice cream, those are no longer under Mfrs 141. These are finished product of maybe the milk, and that becomes being accounted under Mfrs 102. Next. So what are costs to sell? Because we talk about fair value less cost to sell, which is the measurement for the biological asset. So these are the costs that are necessary for a sale to occur. For example, you have the milk just now, and you need to go and pay commission to the broker or the dealer, right? So let's say at first the cost was 1,000, and now the cost to sell was let's say the total here is 200. So these are the fair value, and these are the cost to sell. So you have the levies by directory or agency, and maybe you have some tax that you need to pay or whatever duties, and therefore the fair value less cost to sell here become 1,000 minus 200. So it is actually 800. So these are fair value less cost to sell. However, the costs that are incurred to get the asset to the market, such as transportation costs and other costs, should be excluded from cost to sell, yeah, because they have already been deducted to arrive at the fair value. Next, subsequent expenditure. Subsequent expenditure are those expenditure incurred after the initial recognition of biological asset. After you have recognized the biological asset, you incur some other expenditure over the life of the biological asset, over the life of, let's say, mango trees. You need to also incur certain costs or certain expenses to make sure that the mango trees will be able to be managed in its proper working condition. Mfrs 141, however, does not prescribe the accounting treatment for subsequent expenditure for agricultural activity. If it's in Mfrs 116, these are being prescribed, right? But here, no prescription. So you have a choice of either to capitalize or to expense off. However, Mfrs 141 is silent on this issue of either to capitalize or to expense off. These are the two options, right? Number 1 and number 2, right? But nothing is being mentioned there. So accordingly, the entity need to apply their professional judgment to decide an accounting policy whether to expense off or to capitalize, and the choice to expense off or to capitalize should best suit their needs. And normally we follow the generally accepted accounting practice or the industry practice, right? So therefore, it's up to the company, but you will notice that some companies expense off, some company will capitalize. But the point is the net effect in the profit or loss at the end of the reporting date will still be the same. Only that we have a different in terms of the presentation. But the net effect in terms of the net income, you will still arise at the same amount, right? And for your information, because we use fair value, it has to be remeasured to their fair value, right? And whatever changes in the fair value will be taken to the profit or loss. So subsequent expenditure. Let's look at what are the option as I mentioned here. This has been a summary for you. So this has been the practice. For example, you can expense off subsequent expenditure if you think that was just helping to maintain the biological asset. So this is like similar to Mfrs 116 because there is no guidance. So you sometimes being influenced by how you treat your PPE. Or you can capitalize, yeah, if you think here normally you capitalize if that helps to increase the economic benefits of the biological asset. If that for example cost that you incur helps to increase the quality of the biological asset significantly. So accordingly, option 1 is actually very simple, but somehow it will show a big expenses in your profit or loss. Option 2, yeah, might be done, but it's very difficult to decide in terms of what can we capitalize, right? So therefore, it will depend on the choice of the company, depend on the professional judgment made by the company, and according to whatever industry practice, accepted practice. These are some examples of subsequent costs that are normally incurred for agricultural activity under the management of a company. Feeding costs, maybe feeding costs for the cow, the veterinary services, right? Vaccine for the animal, planting, weeding, irrigation, fertilization, pesticide, providing food supplement maybe for the cow, for the animals that you are breeding, right? Slaughtering cost is not free to slaughter, nurturing, harvesting, and the list goes on. And you have one item here, depreciation of PPE. Let's say the tractor in our example before this, or depreciation related to the pond that were used for breeding. So those depreciation are also part of subsequent expenditure. It has been a practice that depreciation are being expensed off, but there is also a choice of to capitalize where that has actually been the accounting policy of the company. It depends on the company. So in practical scenario, it is common to see that entity tend to recognize this cost as expense in the period and being absorbed as part of their cost of production. Now these are the factors that are normally being considered to determine the fair value. Sometimes these are done by grouping them accordingly, and normally fair value is determined independently, not by accountants, of course. It should be determined by the market itself. Let's say we have in Malaysia the FAR320, the FAR320, the RISDA. Those are all bodies related to agricultural activities. They support the agricultural activity in Malaysia. You also need to see whether is there any active market, or if there is no active market in that present condition only, right? So also whether the existence of active market, is it a high volume transaction or just a normal one? So the definition of fair value, of course, as per Mfrs 13, right? So you can still go and read on your own that part. Now look at the measurement. We go further, subsequent measurement. As I said, subsequent cost. These are also some of the example that you may come across when you talk about fair value. So if you have a fair value today for the same cow on 1st of January, let's say 2019, for the cow age 2 years old, let's say 3,000. So maybe the same cow, similar cow with at the same age, 31st of December 2019, may have a different fair value or may have increase in the price. So let's say 3,200. So the changes in this is what you call changes in fair value. So the changes in fair value can give rise to either gain or losses. Changes in fair value, less cost to sell. So there are two changes in fair value that we need to observe. Either the physical changes, the gain or loss due to physical changes, or gain or loss due to price changes. If you talk about physical changes, it has something to do with the growth of the biological asset, right? Let's say from the day one, a cow is born, newly born cow, you have that today, maybe later it will turn into a mature cow, right? Maybe 1 year, 2 years, 3 years, right? So those are the growth, looking at the physical changes. Physical changes can also be measured by way of weight, by way of size, not just age. But age is also one indicator that there is a physical changes. The younger, maybe sometimes the more expensive for certain animal, but for certain animals, the older they get, more expensive. So if you talk about fair value under the measurement of fair value here, we're going to see whether there is a gain or a loss due to physical changes, and we need to incorporate this in the SOPL. So we will normally compare, we talk about physical changes, the first one, what is the fair value at the end of the period, reporting date, let's say 31st of December 2000x2, and we will compare that with the same date but different characteristic, right? Where what we're going to do is the physical characteristic would be different. Let's say, what is the value of 1 year old cow on 31st of December versus 2 year old as at the same date. So there are some physical changes here, which is in terms of age, right? So we will have to see whether there is a gain or a loss. And that are not just that as a criteria. It can also be in terms of weight, in terms of length. If it's, we talk about, let's say we talk about a tree, which is a plant. So the taller the tree is, maybe the higher is the fair value. And the issue is we need to compare at the same reporting date, but with different physical characteristic, right? So the one that I'm showing here is not physical changes. What I'm showing here is the price changes. So the first one is physical changes, looking at different physical characteristic by and now that characteristic, which are maybe in terms of age, are being compared within the same period or reporting date. Okay, the next one is price changes. Price changes is due to the movement of in the market price, due to the change in the fair value. So for example, you have the same year end, 31st of December 2000 x2, yeah, here. And beginning of the year, it was 1st of January 2000 x2, right? So if let's say we talk about a 1 year old cow just now, the price of a 1 year old cow, 1st of January 2000 x2, is compared with the price of the also 1 year old cow at different date. So whether there is a gain or a loss. So meaning that the key word here is different date, 1st of January 20x2, beginning of the year perhaps, versus 31st of December 20x2, but with the same weight, same characteristic, which is, let's say, 1 year old cow or just 2 year old cow. So same physical characteristic but different date. So as opposed to this one, same date but different physical characteristics. So we'll see this in example, how to apply. Next, the measurement. Just now we talked about gain or loss, right? So gain or loss, and that was due to the changes in fair value less cost to sell. So you may have a gain or a loss. Loss if you can see the fair value, let's say, as at the beginning versus fair value as at the end. You will compare, and if you have a gain, that one will be debited as fair value, credited as fair value gain, and that fair value gain will go to the SOPL, and that is an income. If it's a loss, this one is fair value loss, changes in fair value. Also goes to SOPL, but this will be expense off. So the gain or loss will arise due to the changes in fair value. So when we talk about changes in fair value here, either due to price changes or due to physical changes. And this is going to be done by comparing them between different reporting date. Yeah, so you may have a gain or loss between different reporting date, as well as gain or loss on initial recognition of a biological asset. For example, when a calf is born. So of course, when it is born, immediately there is a price or fair value of that calf, or maybe a cat. Let's say you involve in cat breeding. The moment it is born, so the fair value, let's say, is 1,000. But before that, the price is 0. So therefore the changes in fair value is going to be 0 versus 1000, so it becomes 1000. This is a gain on initial recognition. So normally when a calf is born, when an animal is born, it will give rise to gain on initial recognition. And these gain and losses will be treated similar to Mfrs 140 because they use the same fair value model. So it will be expense of if it's a loss, and it will be credited as income if it's a gain in the period where that happened. So if that is in 2000x2, it shall be credited to the income in that year. And if it's happening on somewhere as an expense, it will also be debited as part of expense in that year. So gain or loss for agricultural produce may also arise on initial recognition. The same thing, it is also measured at fair value less cost to sell. Let's say we talk about a mango, and let's say this is harum manis. Roughly, we know that for 3 kilo, the market price is around 100, right? So therefore, you may also need to go and look at what are the gain or loss of this mango or the fruit on its initial recognition. On the day it was harvested from the mango tree, there is already a gain or loss, right? So of course there is a gain, unless everything that were plucked is all the rotten mango. So it should be recognized, the gain, to the statement of profit or loss. For example, not only that, mango case, but maybe when the trees are being tapped for the rubber, so the latex are being collected. Of course, that will involve some gain, yeah, of meaning to say that the price of the latex that will being collected. When mangoes are being plucked, yeah, that is going to be gain or loss on also initial recognition. When dairy cattle are milked, we're not talking about a cow that give birth to another calf. We are talking about the milk that come from the dairy cattle. So that milk, yeah, itself has a price, and therefore there is also a gain on that initial recognition of the agricultural produce, right? So these are the summary changes in fair value, physical changes versus price changes. So you may have to look at what are the gain on initial recognition and what are the gain or loss that will arise on different reporting date. So this is on initial recognition, but this one is on subsequent measurement. So for initial recognition, this is a journal entry depending on whether there is biological asset or agricultural produce. If it's a gain, you will debit the biological asset and you will credit them in the SOPL as part of the income. Right. So if let's say there is no gain but there's a loss on the initial recognition, you will do it vice versa. And the gain or loss between reporting dates, let's say this is the gain. So let's say there is a loss. Loss will be debited as an expense. But if it's a gain, it will be credited similar to this journal entry here, meaning that if it's a gain on fair value change, and that gain should be calculated from the physical changes as well as from the price changes. So you have to total up that, and that has to be recognized in the SOPL. So the measurement of barrel plants, that one is not in this standard, but it should be measured in accordance with Mfrs 116. So you can just read this on your own. We're not going to cover the measurement of barrel plant, but I've already made some notes for you to read, so you can DIY this yourself, do it yourself.